Hello guys, welcome to my YouTube channel. It is your boy Don Wise. This channel helps us to understand forex trading in the simplest form. In this video, I'll be teaching us on how to stack. Yes, stacking first. What does it mean? It means entering multiple positions on a single trade. Some of us, we don't know how to stack, especially the beginners. So as a result of this, account is being blown. Yes, some of us lose so much money and also blow our account. But after watching this video, you will understand and know how it works. If this is the kind of content you like, please kindly give it a thumbs up and also hit the subscribe button so that anytime a video like this is being released, you will be the first to be notified. I promise, yes, I promise to keep all my videos as short as simple. Let's dive into the business.
Higher high, higher low, 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 higher high. An uptrend. Just follow me. Lower low, lower high. Sorry for that. Lower low, lower high, 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 lower low. The next one, which is consolidating markets, also known as ranging, thus they are of equal, the high and the low. Look at it very well. This one is uptrend. Why this one is downtrend? Uptrend, downtrend, and consolidating markets. Let me bring it also as you see it very well. Very, very important. Then the one we'll be looking at now is this uptrend and downtrend. Let us forget about this consolidating because it's very, very tempting. You don't enter market. Anytime you see a ranging market, you stay off the market. You understand? Because you can't predict what will happen next. So I'm removing it. Consolidating market. Let us look at these two: uptrend, downtrend. How do I know, or how will I be able to identify uptrend or downtrend? Very simple. When you have a series of higher highs, higher lows, at least 3 series of higher highs and higher lows is enough for you to say this is an uptrend. The same thing applicable to downtrend. A series of lower highs, at least 3 series of lower highs, lower lows is enough for you to be convinced that this is downtrend. So having gotten a proper setup, and we say, okay, this market is an uptrend market and I want to stack this market. I want to stack it. I want to move my $100 to $1,000 to $800. It is very, very possible. Watch me now. I have $100 in my account. $100 in my account. I'm risking 10% from this $100. 10%. I want to risk 10% from this $100. I think it's $10. 100%. 10% of $100 is 10. We'll still confirm from the position size calculator. Then the 20 stop loss we are using for this trade is 20. I normally use 20 or 25 as the case may be. You just have to be conservative. Don't be aggressive so that anytime you're at loss, you not feel it that much. Because the wider the loss size, the stop loss, the more the money. Or the longer the stop loss, the more the money. So either 20, 25, okay. But if you are the kind of person that takes stop loss of 30, 35, 40, no problem. So far it's also giving you either the ×2 of what you are risking. In case market come in your favor, you get it ×2, no problem. But it's very good you use smaller stop loss, even 10, 5 better. Okay, having said that, now we have $100 in our account. $10 is what you are removing for this $100. The loss, stop loss we are using, for me, 20 stop loss. How do we know the loss size to use for this stacking, for this trade? How do we know the loss size? Then let us visit a site. Go to Google, you type position size calculator. Position size calculator. I have $100 in my account. I am risking 10% of this $100, and 20 stop loss is what I've already said. Now we know about this trade, which is very, very easy. You know how much you have in your account. You know the percentage you are risking from that account, and you also know your stop loss. So here we don't know exactly this one, because sometimes you may be calling percentage, some people will get confused. 10%, 10% of $100. Once you click this calculate, it will bring out the correct answer. That means amount at risk is $10. If market peradventure go against me, I'm losing $10, of which I will not feel that much, because before you put this $100 here, you have already assumed or admitted that you have lost it. That is how trader thinks. You don't put money and your hope, your mind is there. You may be losing the money. That is when psychology comes in, emotion and all those things. Subsequent video is loaded. Subscribe to this channel. I want to make for you to feel that forex trading is simple, not as hard as you think. Because you can't put everything here because of time, and I promise that I should keep my videos short and simple. But the way this one is going, it might be a little bit longer. Please share patience with me and follow me. Let's go. $100 is what I have in my account. I'm risking 10% of this $100, and this 10% is $10. So which loss size am I using? Look at the loss size you are using here, 0.05. 0.05. Go and put it down now. My loss size is 0.05. That is what we want to use to start this market now that is giving us uptrend. But you can't just use this 0.05 once on this trade. Yes, because it's stacking. There's a difference between if you want to just run it straight. Please go to my previous video, a video that I dropped, how to analyze the market. You will watch it very well. You will see how to analyze the market in a simple way, without stress, without anything. Go to my previous video and watch it. Very, very important. Very, very important. So this 0.05 here is what we want to use for here. But you can't use this 0.05 once. Split it into 3. Just follow me. If you add these 3 together, 0.02, 0.02, 0.0, Altogether is this 0.05. Having know what we are risking with our own proper setup. So what will happen now? We will now wait for our market to come to this level. Here is our key level, point of entry, POI, point of interest, which is our point of entry. Are you getting it? So our stop loss is 20p stop loss, which is below the recent low if it is an uptrend. But if it's an uptrend, it will be above the recent high. Look at the stop loss here. Here is our point. As soon as you click on stop loss, let me just click on it. The reason why I want to make it, I'm using these plain charts on it for you to understand it better. I don't want to even go take it to the chart, but maybe later we'll do that. But I want you to get it clear. Let's assume you enter market here. You must, something like this may appear. Here is your stop loss. Push it like this, below this, and this is normally they take profit. Hope you get that. That's what I mean by that. So this one is our stop loss, 20 stop loss. Let me just put it so that you just understand. This is our stop loss. Here, why this is our entering point? And here that you enter this market, you now use 0.02. So what you have left now is 0.01 and 0.02, which is 3. So we are not running with this one. First, you have entered market with 0.02. So market start going up. There must be a pullback. So you don't have to be scared. Market doesn't work this way. An uptrend market keep on going like this, keep on going. No, it is not possible. There must be a pullback before the journey continues. Hope you are getting my point. Just like that, there must be a pullback for that. So you now wait. As soon as this market come to this place, so there is a pullback now. You wait. Here is another point of entry. You now enter another market here. Already you have moved this first one to break even. Break even means because this market is going up, you break even. It means removing your stop loss to your entry point. That is moving your stop loss to your entry point, which means here is a risk free. If peradventure this market draws down and hit this stop loss here, this 0.02 will not be at loss. Hope you are getting it. Because it's break even. That's why they call it break even. Because you have already moved break even now, you now shift your stop loss for the second entry here, which is below the recent low. So your stop loss is here for the second entry. Why this one is the entry, which is the second one. So we have is this 0.02 used to enter the second one. We still have this one left. You're on profit already. So the market start moving up. You don't have to start immediately. Wait for it to come down to your low. Because if you are doing like that, you are already respecting the market. We say buy from low and sell from high. If this market is going, it means, and you are buying at the same time, it means you are going against the market, which is very, very wrong. So as soon as this market goes up, it comes to your key level again. Take another entry with this 0.02. Already this man here is break even already. So because you have entered another entry, another position, you take your stop loss below this. Hope I'm making sense. Below this is the third entry with the same 0.02. Then the third one, no, the fourth one here, you carry this 0.01 or even 0.02. Add to this one, you now enter market here with 0.04. Move this one already to break even. This particular one, take your stop loss here again. This place with 0.04. This market is now running. As soon as it start going up, don't bother, don't enter any market. Wait for the pullback. Give it another entry here. Already this one is break even. Then take your stop loss here. Add to this 0 to this 1. Here you have entered with this particular, that is the 0.05 here. So if you add this one together, is 0.05. That's our initial normal distance. let me just remove the reason why I put this one aside so that you don't get confused. Is this the same thing? No. If you add them 0.05, just have to just bring it once. So here that you enter this market, you enter with 0.05. So all this place, you are in a big profit. So we are using the same loss. We didn't change anyone. We didn't add anyone. It's still the same 0.05. So here you are with 0. As soon as anyone goes, go with 0.05. So if the market must have gotten the high position that you want to go, there is what we call break of structure. Probably downtrend want to start. Immediately you close your trade. And if you are closing your trade, close it from the lower amount. For example, we have like $10 profit, $20 profit, $100. Don't say, let me just start from that 100. No. The reason is that if you start taking your profits from that $100, before you get to that $10, it will turn to loss. Yes, it will turn to loss. So what you now do, take from that $10, be going up, be collecting from up, $20, $30. I know before you get to that $100, it must have reduced to either $75, $80, $85, as the case may be. But it is better than for you to start taking the profit from that up before you get to the lowest one. It has already turned to red, which is loss. No, it's not. That is not the best way to to close your trade. So you've gotten it. So that is how it works. So even if market, maybe you enter market like this, market is going. You start. That is what some of our traders do. If market is going like this, they start stacking. Buy. No, if peradventure this market decide to come down, it will hit you out. That is when you now blow your account. You say market and forex trading it is scam. No, you are the scammer because you are not taking proper risk management. Some of them, they don't even bother to put their stop loss. They are just after the money. No, it's not done that way. You must maintain your stop loss, which is the risk management. Subsequent video, I will elaborate, throw more light on all these ones so that you just get it. Probably you must have be hearing about risk management, money management, psychology. You don't know detail of it. You are just seeing the surface. I will break it in a different level, bring it low level when you understand it very well. Just stick to this channel, subscribe, like. You will benefit a lot from it. I'm not taking money from you. Subscription is free, like is free, so that it can as well meet other people. We want everybody to succeed in this space. Even if everybody is making money from this particular place, it's your money that you are making. The market will not go down. It keep pumping. So there's nothing like selfishness here. Inform others. Let them come and make money also. You get it? So don't ever be scared of losing money. It's part of it. I'm not saying it to scare you. It's part of it. But the winning side is always bigger, in the sense that there's what we call risk-reward ratio. If you are risking $10, I'm not talking about stacking now. I don't also want to digress a little bit. If you are risking $10 and your market, that is why I advise you, please go back to my previous video when I talk about how to analyze the market. I break some of them down, yes. But let me just throw a little light of it. If you are risking $10 and you have a risk-reward ratio 2, if peradventure market go in your favor, you gain $20. If you go against you, lose $10. Because you are aware of this losing of $10, you will not feel it. So in order not to spend more time on this video, go to that previous video and watch it. You will learn for yourself. So never you be scared of market. There is what we call good traders and great traders. GG, GT, GD, GT. Great traders, good traders, GT. Good traders are those that avoid losses. That is, they are good, but they always avoid losses. Why the great traders always go for losses? Why? Because they will learn from that losses. Because if you enter a market and it gave you loss, that's what we call Jonah. You Jonah your trade. subsequent videos, I'll be elaborating on all this. You will see it clearly. I'm not hiding anything from anybody. As soon as you know that this market give you a loss, because you've journaled your trade already, anytime you come across that market again, you will not spare it. You put it in a bigger loss, bigger money. Why? Because you have already encountered such trade that gave you loss. So this time you have learned from that loss. You are now coming with a bigger money and bigger loss. You will hit it and make your big profit. But if you are scared, you will miss it out. That is another class for another day. Let me just take you to the charts so that you get a little. But I believe that the reason why I use this plain what is it called, this plain chart to explain this is better. Very, very simple. You may not understand it by watching it the first time. Please rewatch it, rewatch it. You will get it. So let us go to the charts. For example, let me say this is what we want to stack, this particular one. We want to stack it now. We are waiting. Here is our point of entry. So you enter here, take your stop loss here below this one. You understand? So what you will do, let me just remove this and use my arrow to say it. This particular one, you've already entered market here, this place. So market is moving. As this market is going up, look, there's a pullback. This is red. This red you are seeing here is a pullback. So you now enter another trade here, the second one. You see, this market is still going up. See another pullback here. There must be a pullback. So this pullback, enter another trade. You will now enter a trade 3 times here. The market start moving again. Look, another pullback. Don't be scared. Enter, because your proper setup shows that this is an uptrend, and the uptrend will go at least a little long before start retracing, before there will be a break of structure. So by the time it starts coming down, you take your profit. It's as simple as that. Very, very simple as that. But some people make it difficult for them because they are just after the money. They are not even talking about stop loss. They don't push stop loss, because the more you push your trade, put it to break even.
Thank you guys for watching. Please do well to like and subscribe. Subscribe, please, so that it will help this channel grow. See you in my next video. Peace.